So welcome everybody. Welcome to the monthly AlgoDynamix Podcast Series, where we invite very interesting people. So I'll introduce our speaker in a second. But first things first. Tarun, do you want to unmute yourself? You want to give us a bit of context, what's going on here and what we're doing at AlgoDynamix, and I'll hand over to Svetlana. So Tarun, go ahead. So
Thank you, Jeremy. Hi, everyone. My name is Tarun. I'm the president of AlgoDynamix North America. Manage and oversee our business here at Algo. For those of you that don't know and are tuning in for the first time, we're a data analytics company. We provide price forecasting for the financial markets, the crypto markets, commodities markets, and equities markets. We have a software business. We sell our software to high net worth individuals, tech entrepreneurs, um, and hedge funds as well. We offer a 3-month trial package if you wanted to try out our software. We'll provide you analytics for 10 cryptocurrencies if you're trading crypto, 20 stock symbols if you're trading equities. And then additionally, we have a fund partnership business where we co-launch new hedge funds, so crypto funds, equities funds, commodities funds, with a variety of partners. Once again, high net worth individuals who want to start their own hedge fund, tech entrepreneurs, small, medium sized hedge funds that are looking to grow and expand. I'll give you some examples of some of our current partnerships globally. We have an AI equities fund that's trading live in California with a firm called R42. It's a venture capital firm run by Dr. Ranjan Nag, very prominent venture capitalist and Stanford professor. We have crypto portfolio that's trading live on Solideye, which is a UK crypto exchange. That's been trading live now, I believe, for a couple of years. We have our partners in Hong Kong, Jacobian Capital, will be launching a long-short crypto fund at the end of November. So we're very excited about that. And a couple of more projects in the pipeline. We possibly might be launching a commodities fund very shortly with a US investor and also a semiconductor fund. So we're very excited about those projects as well. So if you want some more information about any one of our businesses, or just wanted to have a quick exploratory chat with Jeremy or myself, you can reach Jeremy at jeremy@algodynamix.com, or you can reach me at Tarun at algodynamix.com. Thank you.
brilliant. Thank you, Tarun. So yeah, lots going on in terms of funds and partnerships and software analytics. We might have something on the ESG side. I don't know yet, but let's get that one then. So Tarun, thank you very much for joining. I think you're dropping off because it's your Diwali, so we're gonna
Yes, thank you.
wish you happy festivities and lumen and
Thank
lots of
you.
lights, Tarun. So
Yeah,
thank you for that, Tarun. Take care. Enjoy.
thank you. Happy Diwali to anyone who's celebrating. Thanks. Bye.
Happy Diwali, everybody. So good. So thank you for that. So good. Svetlana, delighted. Thank you for joining us. A lot's going on. So I prepared an introduction, but you're about to surprise us. So
That's right.
I'll do the official intro, but then you can sort of surprise us a bit like the premieres at the Cannes Film Festival. So you are currently still associate professor and at I think probability and partners. So that's on the risk side, and then academic background, strong publications across the board. By the way, so I had a look. So you've got commodity, you've got sentiment. You've got ESG, you've got portraits, so quite a range of publications. So very interesting. So that's your background, and then strong AI, ML, machine learning background. But Svetlana, you're about to surprise us. So take it away. The
Yeah.
avant-premiere here. So
Well, thank you very much, first of all, Jeremy, for inviting me. I'm very happy to speak at your podcast. And indeed, head of quant modeling and probability and partners and associate professor at FU Amsterdam. But both of this is the last day that I'm at those two positions. So you caught me at the
oh,
end of
come on,
my
tell us, what's
stunt.
happening?
Yeah,
Yeah.
and this coming Monday, I'm starting a very exciting new adventure at Bloomberg in London.
Wow. Okay, Bloom. Okay,
Yes,
you're moving to London. Okay. Wow.
I'm
Okay.
moving to London. Yeah,
Welcome.
and
Welcome.
starting a very exciting new position, the details of which I will obviously share on LinkedIn next week.
Well, brilliant. Congratulations. Okay. Interesting.
Hmm.
Interesting on that
Yeah.
one. So good. So Svetlana, just going back slightly, I think a few years ago we met, and I think some of your students did a project for us. I don't know if you remember that, but I
Yeah,
think that,
yeah, of
yes,
course.
that was
Yes.
very good. So you work currently, and I think so you're supervising back so masters and PhD students, I guess, correct? Is that what you're doing back in the days?
Uh,
Yeah.
yeah, yeah, but also I was teaching, things like derivatives, quantitative risk management, and supervising students at industry project internships. And what I found is that doing that, supervising those kind of young folks across financial industry, that's really what gives you exposure to so many different things. And this is why my publication record and sort of interests are so wide. I indeed worked on systemic risk and derivatives, commodities, ESG and climate risk, and many other things. Maybe it's because I like new challenges and new topics. I want to always be on the forefront of what's happening in quant finance. But yeah, supervising students is definitely something which keeps you young. And I'm definitely hoping that working with my younger colleagues at Bloomberg will keep me young in the same way. Sort of
That,
gold plated, PhD students, basically.
is that the secret then? Work with the younger. Okay, interesting. I'll write this down actually, Svetlana. So that's interesting. I mean, lots of topics you mentioned. I think ESG is one of them. Derivatives one of them. I heard you speak at one of the banking events online on this whole large language models and Gen AI.
Yeah.
What are you seeing? I mean, it's a broad question, but what's the trend? What are you seeing? Anything standing out? Because there's lots going on, isn't there, these days? What's your thought on what it
Yeah.
is? Yeah.
Well, I see, I have been in consulting business for the last 7 years with probability and partners, and on my own, actually, even longer. And what we see among our clients is, especially financial institutions, is basically trying to figure out how they can monetize and use large language models
Yeah.
and generative AI generally for their, all sorts of day-to-day operations. Dipping their toes in, you know, um, uh, writing reports, analyzing reports, summarizing reports. These are things that we already see happening quite a lot, and looking forward to kind of more advanced applications like sentiment analysis, like potentially creating some sort of risk indicators from the textual content with the help of large language models. So those applications are more on a kind of wish list
Yeah.
rather than on, currently used applications list. So I think a lot of financial institutions kind of struggling with onboarding those large language models in anything, except for, let's say, customer facing applications. Also because EU AI Act, which you probably know about, is rather, well, I shouldn't maybe say prohibitive, but quite, yeah, hard to interpret and potentially very restrictive in terms of what kind of AI models you can use and how you can use them. So I see financial institutions, especially in the EU, kind of being caught between two lights. On one hand, this big AI revolution which is happening in front of our eyes, and them wanting to use it in all sorts of applications. And on the other hand, a EU AI Act, which, potentially could punish them for not having checks and balances in place.
This is a massive topic, isn't it? The EU, because I think February, March next year it goes live, right? So that's when it's enforceable. But obviously, companies are getting ready now in terms of
Hmm.
compliance, actually. So, gosh, okay, it's a massive one. I shouldn't say this because we're being recorded. Well, it's too late now. This is not the reason you're moving to London, is it, Svetlana? You don't have to answer that one, but okay.
No, no, no.
Okay.
I'm very much looking forward to joining Bloomberg, a big organization,
Good.
exploring myself there. But yeah, EU AI Act is something which worries a lot of people, and rightfully so.
Yeah, interesting. Okay, so that's on the regulation bit. So I
Mhm.
think just, summarizing it, and I fully agree, by the way, in terms of what we're seeing, using large language models, for customer support, knowledge base, that's generally okay. That's, dare I say,
Mhm.
understandable. But, the moment you start doing something a bit more, dare I say, regulated financial, I can see where the hurdles appear, basically. I think that's, yeah, a good point, really.
Yeah,
So, yeah, yeah.
I mean, there are, of course, quite a lot of rather sensitive potential applications, such as, credit analysis or know your customer, KYC, anti-money laundering signals, and things like that. And some of these areas is something where generative AI could really help and, make things more efficient, easier. But these are exactly the areas which are deemed, highly
Because
sensitive.
they're,
And
they're they're category 4 or category 3, aren't they, on the EU?
yeah,
Oh, yeah, that's right.
exactly.
Yeah, high
And
risk. Yeah.
so I think it will take a very long time before any sort of AI, machine learning, LLM is used for many of those applications, if ever.
It's interesting where the conversation's going. Actually, I mean, it's been brought up in various various instances, that danger of sort of different geographies and regulation arbitrage, right? Because I guess
Hmm.
in other parts of the world this is probably less applicable. So I guess, I mean,
Yes.
I don't want to put words in your mouth, Svetlana, but possibility that different parts of the world move at different speeds. Then is that a fair
Yeah,
statement? Or yeah, interesting.
definitely. I
Yeah,
think I've been to quite a few industry events, and in the past year, and LLM and generative AI is always comes up in those events. And it's not my words, but what you hear in those kind of meetings and in the industry events is that there is an overwhelming feeling that it could potentially leave Europe behind, simply
yeah,
because companies who offer this kind of solutions will go elsewhere and develop their propositions there, where clients are more eager and less afraid to use this kind of stuff. But of
yeah.
course there is still a lot of applications, potential applications on which financial institutions can work, which are less sensitive and yet just as useful. Some of them more in the area of, like, I wouldn't say science fiction, but a little bit further along the road, like like those risk indicators, like
Yeah.
creating some sort of trading or investment strategies. Uh, and I think the efforts in that direction are very interesting and something which people should work on and think about really hard.
Yeah, brilliant. Okay, good insight. Good insight. So I think that's on the sort of large language models, which we definitely find fascinating. I think it's a moving space. So I guess just different topics. Obviously, this is your show, but I think you're very keen to sort of talk about climate risk. I guess this is definitely one of your other areas.
Oh,
Is
yes,
that
for sure.
go
Yeah,
ahead,
yeah, yeah.
go ahead, Philip. Go ahead. Take it away. Take it away.
Yeah,
Yeah.
yeah, I think that is also pretty high on the agenda of financial institutions. And in fact, next month in November, I will be speaking at both Quant Minds and Risk Minds.
Mm,
And Risk Minds event in London is definitely one of the biggest, if not the biggest,
yeah.
risk a gathering of risk professionals of the world. And I expect that climate risk will be very high on
Yeah.
the agenda, and there will be sessions, there will be panels, and so on. We have been seeing it for the last few years, and I don't see that topic, subsiding, but in fact growing. Again, it's often very regulatory
Yeah.
driven, especially for banks, but asset managers, those kind of institutions who are not, immediately pressured by regulators to assess the effects of climate risk on their portfolios, are also very keen on developing those models and very keen on assessing, the effect of climate risk on their investments, on the default probabilities of their clients, of corporate bonds, and so on and so forth. So yeah, I think that's a very growing topic, and there is a myriad of challenges and questions I'm sure we can talk about in the next,
It's
you
a
know.
big topic, I guess, because I mean, potentially massive tail risk. I'm assuming, right, which may or may not be priced in. I guess my immediate next question is, do we have any decent models on this front? I guess I don't know. Maybe sort of a short summary, Svetlana, in terms of what you're seeing about how one should best approach these events.
Yeah, that's a very good question. I think the development of models is um, at the like literally in a fourth gear right now across data providers, across service providers, and across financial institutions themselves. And slowly but surely, certain, I wouldn't say, models, but approaches are emerging. And also people realize, where main challenges lie. So, for example, it is on this physical. So, as you probably know,
Uh,
or those of you that don't, I will mention it. The climate risk constitutes of two components. One is called physical risk, and that's what we think of when we think about floods. As we witnessed yesterday in Spain, and hurricanes and other big climate events, or you know. Some chronic events such as rising sea levels. So that's what's called physical risk.
uh,
But there is another type of risk which is very important, and in many situations actually is more important for financial institutions, and that is called transition risk. And that's the risk of transitioning to a more green, carbon neutral emission, zero emission economy, because obviously that will require a lot of investment. Some business models will become not viable, leading to losses for many companies, but also opportunities. And this risk is well, what we call transition risk. So I think on the physical risk side, it's clear that we need a lot of meteorological data, forecasts, ranging from rather global kind of risk maps of events of different
uh,
varieties, floods, forest fires, hurricanes, and so on. So sourcing and finding this data is very important, from organizations such as NOAA and many other regional but also global organizations. But this stuff has been around for a while. What is, however, new and very difficult is to translate the effect of those events, risks of which
uh,
we could find, on those weather maps and climate maps and so on, to translate it in the financial consequences for companies in terms of, lost revenues, or as a result, increased probabilities of default, loss of equity value. So making this step from, let's say, more kind of weather meteorological risk maps to the translating that into financial risks, and then to the consequences of to portfolios, to financial portfolios. I think that is really something uh, which is turns out to be much more difficult than people thought. And of course, financial portfolios are not just large corporates. These are also for banks, mortgages. So, what is the effect of all these physical risks on real estate, and what is the effect of the, all sorts of laws and regional, um, regulations in terms of transitioning to this new kind of CO2 neutral economy? What is the financial consequences of those things for corporates, but also for mortgages and other types of loans and other types of assets?
Wow. Okay. I think the quant numerical community is going to be busy for the foreseeable futures, actually, Svetlana. So that's good to know that we're
Yes,
we're going to keep busy.
I definitely think so. Yes.
It's interesting. I didn't know that, by the way. But I'm learning actually. That's why it's great, running these events about learning. This physical risk, and I guess the transition risk, right? When regulations change and you need to adapt, and old business models may not be viable. And I guess your ultimate point about, how does it translate to portfolios and returns and equities, basically. So these are all course of fascinating topics. So I
Mhm.
guess sort of, vaguely sticking to the program here. So a bright future, you would say, Svetlana, for people like ourselves, data modeling, AI. I don't see that going away anytime soon. Is that a sort of self-serving statement or?
Yeah, for sure. I think the quant profession is in constant flux,
Yeah.
especially now with the emergence of these new technologies, machine learning, AI, but also with emergence of new risks like climate risk and stuff to work on, which we weren't working on before. It was kind of confined to the dusty insurance, business, but now it's something which quants will be involved in the foreseeable future. But I think that the quant profession is changing because um, also, again, if you attend those kind of quant finance events, derivatives and so on, it almost looks like the models that we used to, starting with Black-Scholes, carrying on with stochastic vol model and, Levy process and so on and so forth, are, I wouldn't say getting outdated, but alongside them come model free approaches,
Yeah, yeah,
in quotation marks, where you basically train a machine learning model to to be your pricing model, to value a derivative as you know mapping from input parameters to a derivative value without thinking, what is the stochastic process, how does it translate into the risk neutral payoff, and so on. And so I think, harnessing those models, but not just kind of thoughtlessly, but understanding deeply, what kind of properties you need from this model, what um, effects, what features you should have, to comply with what you see in the markets. That's the added value then of quants. You know,
interesting.
they will be working on different kind of models, and their work will be also different, more like giving tasks to those machine learning models, and then again coding, you know
Yeah,
in code gpt and all these other kind of tools also, gonna help us to code and, one would say, take bread away from quants, especially those, heavily into coding. But I disagree with that because it's still, the reality check, the understanding of the markets, the understanding of the features of the products, and what you're getting out of all these codes and all these kind of non-model like models. That's what the job of the quant is going to be in the next years.
interesting. Actually, I just unpacking this actually, sort of great value here. We had once again, I hope I'm not putting words in your mouth here. We had one of our previous speakers, John Harper from Cambridge Machine Learning. His point was that the domain knowledge matters. Domain knowledge matters enormously. Would you tend to agree with that? Is that a fair statement
Yeah,
or? Yeah.
yeah, I think so too. I think that it becomes more important than ever. However, it is possible to bring some of that domain knowledge into the generative AI. And I think people are only now waking up to that kind of idea. When you talk about generative AI, especially with, professionals in financial industry, they first think about, prompt engineering. How do we give, LLMs good prompts to get a good answer? So now the next step is what we call RAG,
Yeah.
retrieval augmented generation, where you kind of augment your LLM with some database akin to kind of open book exam, like you ask something, but LLM can look up those things online or in a database. But I think what is really is much more going to be a game changer is what we call the parameter efficient fine tuning. And
Mm,
that is ability to take a foundational LLM like Llama 3 and inject in it a much needed domain knowledge by presenting it with a lot of, particular examples of what you wanted to do. For example, you wanted to analyze news content for sentiment, or you want it to write model validation reports and so on. And it turns out that it is possible to do it now very efficiently and very precisely, so you can fine tune those models to inject with them with this very much needed domain knowledge. So I think combination of teaching those clever algorithms about this domain knowledge and domain knowledge of the engineers and quants working with them, that's what's going to really make a difference.
Interesting. So I think it's been going on for decades, this debate about, is it just humans or is it just machines? But I'm hearing it again. So it's humans and machines put together. Is that once again a fair statement or?
Yeah, I think
Interesting.
so.
Yeah.
I think the you can teach your LLM even with this parameter efficient fine tuning all you want, but financial markets are constantly changing and they are constantly evolving and moving. I mean, look at the climate risk. That's quite a new thing. We need to learn about it ourselves before we even teach, concepts to the LLM to be able to assess that kind of risk. So I think this constant, flux, constant learning curve for both quants and the tools such as LLMs um, makes this symbiosis extremely important. I still do think that on the kind of intuitive level, humans are able to absorb information very, very fast, although we think that LLMs can do it much faster. But I think nothing replaces intuition, or I would say intuition sometimes successfully replaces information. And that is something that we have, and I hope that we will keep on having and not lose in that sea of LLMs, AIs, and the whole alphabet.
Interesting. Wow. Okay. Okay. So very, very human centric as you should be, by the way. So okay, lovely actually. Shameful pitch actually, as I'm in this sort of position about mixed views about too many models and too many parameters. Svetlana,
Mhm.
we've been quite behavioral on our side with our software, with our analytics, and there's something about the more parameters. It's a longer topic, but the more parameters, the more scope for overfitting, and if you've never
And for
seen
model
and for
and
model,
for
yeah.
model risk.
Oh yeah, absolutely. Model risk, and then changing world conditions, pandemic and whatever different climates. So I think
Mhm.
combination of tools really. So
Yeah.
fascinating, fascinating. Okay, good. So Lana, thank you so much for that. We have some amazing people in the audience, and I know that there are going to be some questions. So is there anything else? So I think so announcement about your Bloomberg thing. You'll be speaking at Quantitative Risk in November, I think. When is
Yeah,
that? In
yeah, it's in November, so it's Quant Minds and
quite
Risk
months.
Minds, two events running parallel in London, and yes, so I'm gonna speak about LLMs and climate risk and other things. So hope
Brilliant.
to see some of our attendees there.
Yeah, I think there will be some people actually. I think that's on that
Yeah,
one, and I guess you'll be doing other stuff and keep us updated on LinkedIn and everything else. So
of course.
brilliant,
Yeah,
brilliant,
and
actually.
what I wanted to
Right.
mention is
Please
also
do.
I saw the list of attendees and lots of you guys are not in my connections, so do
Yet.
yeah, exactly, do shoot me a message, and I would love to hear more from you, on a day-to-day basis.
Brilliant. That's what these things are for, actually, because I think that the world's getting smaller every day. Actually, people just don't realise, that's it's was it 8 billion of us, but I think we're more and more connected. So thank you very much for that. Okay, I'm going to ask some people now. So let me just stop recording now. Let me just press the stop recording now.